Welcome back. Well, for the markets, it's actually just about consolidating. We have the IT index, which is gaining. Just watch out for a couple of these pharmaceutical stocks, such as Dr. Reddy's as well. To be fair, Dr. Reddy's was down yesterday. It was down around 1.5% odd. And today it's up around 2.3%. So some amount of bounce back, which has taken place there. GST on individual health and life insurance premiums has been reduced to zero. To discuss more on this, we have with us Kamlesh Rao, the MD and CEO of Aditya Birla Sun Life Insurance. Mr. Rao, thank you very much for joining in. Well, the move with regards to GST on life insurance has in fact been called a land back by a lot of your peers. Can you just give us a sense in terms of how important a move this is in order to shore up the life insurance industry?
I think it's in line with the aspirations of the government to ensure that we have insurance for all by 2047. So I think it's a welcome step in that direction. Premiums, like I said, on GST premiums could be as high as 18% on protection. India has lower coverage and has a huge protection gap. So my view is that it will go a long way in making the cost of insurance lesser, because 18% is significant, or the ability for customers with the same cost to buy significantly more protection than what they bought in the past could be the other way of looking at it, because India has two issues. One is penetration is lower, and of course people who are insured are lesser than what they should be. So I think from both points of view, it will be a welcome step for achievement of insurance for all by 2047.
You know, while these are positive from a customer standpoint, the worry is that they may increase the cost for insurers. Do you believe that, this increased cost for insurers would be enough, and the increased preference or increased penetration by customers would be enough to offset the increased cost for insurers? What we're trying to understand is, from an insurance company standpoint who's in the business, they may stand to lose a little, right? Have you put a number to that?
So typically, there are three elements. One is you get input tax credit. So obviously, if the premium GST becomes zero, then there are issues related to input tax credit, which we are putting a note together and will make a representation. Fortunately, reinsurance premiums are exempt. So that's a part of the input tax credit. There are distribution costs which are related directly to the sale of the individual insurance policies. So that's not exempt. So that's some representation that will get made on behalf of all the life insurance companies. Adjusted for that, I'm saying there will be a hit on some other costs that are involved in terms of servicing. But even if I look at all these costs put together, depending on how the representation goes and what we get as feedback, still out of the 18%, my sense would be at least 12 to 13% would definitely be passed on. If any, depending on what comes through, 3 or 5% would be the cost that will have to be used for ensuring that the input tax credit cost that impacts the life insurance companies will have to get taken care of.
Okay. So, Mr. Rao, just wanted to understand what is the impact that you are assessing on your embedded value now?
So, embedded value impact is on account of a different parameter. So basically, it's also on account of the fact that renewal premiums of what you've done in the past, they will also get exempt as per what the regulation says right now. So if they don't pay on the entire stock, there will be an impact. But the impact of this on embedded value is not very, very large. The worry is more on the input tax credit, because GST will become zero, but there'll still be costs related to servicing of the policy that you do on an ongoing basis. And those costs on which we pay GST, we will not get input tax credit on that. So it's an issue of cost and not as much the impact on the embedded value. The embedded value impact will be very, very small. So that's not a big worry. Like I said, the bigger worry is on input tax credit related to GST, which has become exempted.
Okay, Mr. Rao, you mentioned 3 to 4%. Is that going to be that increase in cost that comes in, or what was that percent that you mentioned?
So typically in protection business, I gave you an example because that's where the GST is 18%. Because on the other products that we sell of insurance, the GST is roughly about 4.5%. So that impact is not very large. On 18%, assuming that everything stands as is right now, and input tax credit like what we want on at least basically distribution costs that we are making a recommendation. If it stays as is, then there could be an impact of 4 to 5%, which means the benefit that get passed on. Today he was paying 100 rupees plus 18 rupees was GST. It may end up to the cost to him was 118. It may end up being in the new regime, the cost may be 105 or 104 to the customer as far as the protection example that I took.
And what's your ask from the IRDAI and the GST Council right now? And have you gotten any assurance from them on whether they're listening or not?
So we've just, as an industry, putting a document together as we speak. And like I said, the basic ask is on two elements. One is on basically looking at the input tax credit on distribution costs, because in they've exempted reinsurance costs, which is directly linked to the cost of doing the business. So distribution cost is similar. So we asked for that. And we obviously asked for looking at to see whether on past policies, whose premiums will come going forward, can we still avail of the input tax credit even if the GST has become zero? Because for the input tax benefit that we get, these two are very large components. The insurance industry will still continue taking a little bit of hit on the other costs, which is related to servicing of the policies that we do, because they are not directly attributable to every policy that we sell. But on distribution cost and for renewals of the past that will come with no GST, the input tax credit benefit on that is something that we are planning to ask for.
Okay.
Mr. Rao, just a quick one. Will term, ULIP, endowment, that see a higher increase in terms of costs?
I was talking only about term, because in ULIP, it's basically on the charges, the GST is 18%, which is a very small part of the entire. But for other savings products, the GST is 4.5%, whereas on protection business, which is term, the GST used to be 18%. So the discussion on that 18% is significantly large. But like I said, even if adjusted for cost, at least 12 to 13% benefit will definitely be passed on to the customer, as we see at this point in time.
I didn't quite catch what you're assessing in terms of the VNB now.
I didn't get that question. You asking me?
I didn't catch what you're assessing in terms of the VNB, the value of new businesses now going forward, Mr. Rao.
So VNB, like I said, if we have to take the impact of the input tax credit that we would lose or not get, like I said, if that translates to 4-5 rupees, which means the 18 rupees will not get fully passed on, but 4-5 rupees will is what the customer will pay instead of 118 if he pays 104 or 5 rupees, then there is no impact on VNB. The VNB also gets taken care of.
Okay, Mr. Rao, thank you so much for joining us on the show, explaining us, what this GST, how it plays out and what is the ask of the industry now from the IRDAI as well. Thank you so much for that. But on that note, we're going to sip into a very short break. Don't go anywhere. We'll be back with more market-specific and stock-specific action after the break.